are in listen-only mode.
Good afternoon, everyone. We're starting on time. We had 100 and some register, but they're not all here, but I'm going to get started so we can cover some of these things. Now, I've got this PDF file in front of me, some things I want to talk about today. And if you look in the box there, it should say Roundtable February, a PDF. If you want a copy of this, you can just go ahead and click on it, and it should open in your browser. You could save it. So I'll get started. I'm going to go over my views, some views, filters, and combos. I can't possibly go over all of them in an hour-long session. There's too much there, but I'm going to go over some of the views, filters, and combos, primarily views in the warehouse and chart views that I use most often. And the files that are available to either Insider Club members or to the people that are taking my webinars, and they're identical. And they give us all kinds of options for prospecting. And I just want to run through a few of these things. I'll just point this out right now. When I prospect, I consider these factors and techniques. And those of you in the webinar, you're going to find this repetitious, but these are things that I am going to cover more in depth as we go through the rest of the webinar. We have webinar series. We have 5 or 6 more sessions. I always consider setup risk, and the setup risk is the amount of money that I'm willing to risk on a trade, and it also considers what is known as intrinsic risk, and that is the intrinsic risk in a stock. If you have a really loose chart, for example, I don't even look at those anymore. Well, I do occasionally, and whenever I trade them, I seem to have bad luck just because they're very loose charts, and I should know better. But that is considered intrinsic risk. When you're looking at a stock, and you'll see examples of this today as I go through it, you should be looking for stocks that are pretty tight, and that they have short-term support if you're going long, and short-term resistance, short to intermediate term, I should say, if you're going short. The contextual risk, that's where we consider what's going on in the market. Now, right now, we're in this raging bull market, which absolutely makes no sense. And I see Goldman put out a warning today that people are going to be disappointed. Well, usually that's the case. When markets get like this, they get overheated, and then they correct. But you never know when it's going to happen. Somebody wrote me yesterday and asked me, a customer, a person I've known for a long time, if I had any indicators which are indicating or pointing to a market top, and I wrote back and said, well, market tops are essentially impossible to predict. You just have to wait until you start seeing them turn. And then if they pull back and rally, and that rally fails and they break through support, then there's a good chance that the top is in. But I really don't see that yet. In addition to the intrinsic and the contextual risk, I look at expansion. That means a stock is moving up or down, and the candles are getting larger. As a rule, they're finishing near the top of their daily range, and that's expansion. Contraction is when they settle down and start basing a little bit. If they're in a long-term trend, that is a good time to put a trade on. Anyway, I look at the top down, I look at the industry group strength and weakness. I use VPA, which is volume price analysis. I'm sure you're all aware of that now. If you've been looking or at HGSI or using it, that's that's an integral part of the process anymore. It's very important because it gives us a roadmap to what's going on. No, the flags and the signals are not always correct, but you'd be surprised at how often they are. Another key component is VPOC, or volume point of control. That's a 10 period, a 10 bucket. I use that as one of my triggers along with the force indexes. And getting back up to setup risk, I always do position sizing for the setup risk, and I have a spreadsheet for that which goes to the webinar attendees. And then I always enter a trade with a buy stop or a stop limit order if I'm going long. That's so I can do it overnight and or early in the morning, and then I can walk away from the computer and I get filled if my targets get hit. Now I'm going to take a quick look at the market today. I'm going to look at some what I call IR, or impulse reaction candidates. Yesterday we did that at the webinar. We came up with a bunch of semiconductor stocks because the semiconductors for months now have been one of the leading groups in this market. Banks and semiconductors are two of the groups which have been in the leadership role. I'm going to look at these screens, VPA, flag today, and I'm going to start with the impulse reaction, VPA flag today, a 3-day window on the volume point of control, VPA flag today, what I call rocket stocks. Okay, I'm going to get into rocket stocks, going to talk about the fan formation, and then this is something I'm going to do. I'll make a group from the fan formation, and I'm going to apply another view, and that view actually looks for stocks that are in a counter trend to the primary trend. And then take a quick look at the folder 10, view number 1, which is accumulation. And then there are some intraday views on here which are very powerful tools, and I want to cover those. I'm going to talk about views number 1 and number 2 and view number 8, and it deals with IPOs, so we can find IPOs. First thing I'm going to do, my intradays is enabled, but I'm going to go to manual because I do not want to have this updating as I'm doing this. So I'm going to go into the designer, and the group that I'm in right now is the broad market indices. I'm going to take a look at one index today, and that index is going to be the S&P 1500 because it's made up of the small caps, mid caps, and large cap stocks. So it is a good proxy for the market. So I'm just going to click on that, double click on that. Now I updated this index 15 minutes ago after the market closed, and after all of my intraday quotes are updated on a 15-minute delay basis. And this is what the S&P 1500 looks like as of the close today. Now this is using market cap weighting, and these lines represent accumulation. Now I did this during our webinar yesterday for the webinar series attendees, and this A accumulation line was headed straight up, well not straight up, but at a 45-degree angle, as you can see. And today, this is the first day that I've seen a little dip in that. So this represents A accumulation, or the stocks within the S&P 1500 which have A accumulation. So little dip down here, nothing to be concerned about yet. The index itself, if you look up here, this is solid green, which means that the market is still in A accumulation. It has not come down from that. These lines here represent A and B accumulation. This represents D and E distribution, and you can see that they are still spreading apart. So this market still looks strong. The only thing I see here is that we moved up considerably today, especially in the ES futures, and the volume was less than it was on Friday, at least the calculated volume. So we're getting a move up here, and if these volume figures are right, and I would have to wait for the nightly download to really verify that. But if we're moving up on lighter volume, then that's something to be a little bit worried about if it continues, especially. But what we're probably seeing also is short covering, because there are a lot of people betting against this market going any higher, and when it comes out of the chute in the morning and it opens high, some of these people are scrambling, some of these traders are scrambling to get out of their positions, and we'll see how long this lasts. At some point we need a correction. Now I'm going to look at one more chart here. By the way, for the Insider Club members, these are all in the top-down charts view. There are 5 index charts here, which I look at. I'm not going to take the time to go through all of them. I just don't have time to do that. But this chart right here, number 5, shows me what happened in the S&P 1500 today. You can see that 76% of the stocks advanced, 22% declined, and the rest were essentially unchanged. Today, 16% of these stocks in this index hit a new 52-week high. Now, that's a lot of stocks hitting a 52-week high. Well, it seems like a lot of stocks, but anyway, more and more stocks are hitting 52-week highs. The number of stocks that are under A accumulation is almost 22%. The number of stocks under B accumulation is well, it is 46%. So still a very strong market. The only divergence I see today really is a lack of confirming volume to the upside. So market's still bullish, but you really need to be cautious, and that's why you have to control risk. Risk control is paramount. Okay, now I need to move this out of the way. I want to see where I'm going here. Okay, so let's take a little closer look here. I'm going to close this chart. I'm going to go into the warehouse view. And once again, I am in my top-down process views. I'm going to go to view number 2 under top-down, because this is my demand-supply view, and it gives me the ability to sort on accumulation, or I'm sorry, advancers versus decliners. And surprisingly enough, or to me anyway, is that the utilities were one of the leading groups today, with 15 advancers and no decliners. Seems like a fairly conservative group to have that many 15-to-1 advancers over decliners, but that's where a lot of money flowed. I mentioned that semiconductor stocks have also been one of the strongest groups, and once again that continued today. 28 out of the SOX, the Philadelphia Semiconductor Index, 28 stocks are positive and only 2 were negative. We're seeing a lot of the household stocks, or the defensive type stocks, and the mattress stuffers also near the top of the list here. These are large cap old companies which have been around for a long time. Now, any weakness, if you consider this weakness, the healthcare index is down here at the bottom, and it had more decliners than advancers, and that is the only index in my broad market indices group that is showing that. Everything else is positive. In fact, some of these are extremely positive. Let's just drop down quickly, I can do it this way, into the industry groups. I didn't want to do that. I want to go here. I'm going to change to the industry groups. And look at this here. This is confirming what we're seeing in the broad market indices. The integrated utilities, 29 advancers, 1 decliner, and 1 unchanged. Steel producers were extremely strong again today. 20 advancers and only 1 decliner. Integrated oils. I don't know where oil closed, but it was very strong at the open today with threats of more OPEC cuts. I mean, you know, you're playing the news there, but anyway, the index followed through, and then renewable energy equipment and so on. I'm going to go down to the far end. Let's see what's down here. Security, commodity exchanges down at the bottom, the lower left, 0 up and 5 down. There were some groups with some weakness, but in this type of market, we really need to concentrate on the strength. I'm going to sort on this raw combo, and this is based upon demand, which is based upon price involvement, price and volume and stock movement. And as I said earlier, this rally's really been led by semiconductor devices and the banks. And if you look at the demand here, semis, 56 advancers, 7 decliners in the devices group. The banks were 1.86 to 1 today, 245 to 142. So the strength is continuing where it was. Just going to bring up this semiconductor devices group, and you can see that this information is reflected in just what I was talking about over here. 87.5% advancers to only 10.94% decliners. So the strength continues. Okay, that's enough of looking at the market. Now I'm going to go into some of these other views. These are the views, though, that I use every day. And why? Because they give me great insight into what's going on in the market. I use these views, and I also use the smart groups. There are some smart groups in there called stocks and groups moving to the upside and the downside, and they also show rotation. But if you're looking for a rotation, you can't find a better program than this to stay on top of it. I just showed you what the market's doing based upon advancing issues versus declining issues, and that's something that you can stay on top of every day, and you should. And then you can go top down from that if you want to start prospecting. I used the semiconductors yesterday. Let's just do this very quickly. I'm going to right mouse click. I'm going to change to the industry group. Now I have to go to a different view because this is for indexes, this number 2 view under top down. So I merely drop down to view number 6 under here, which is my scorecard view. These are all semiconductors, and I'm sorted on raw combo. This information is actually from last night, from the last update. I can update the indexes intraday just by going into what we call the designer and telling it to rebuild these indexes. But if I want to get a full update of the stocks and so on, which reflect the demand as of today, I would have to go through a full intraday update. On my computer, it takes about 5 minutes. It's no big deal, but I rarely do that. I just don't see any need to do it. But you can see right here with this column, and the reason I don't see any need to do it because this column right here shows me the intraday prices. Now here happens to be a little semiconductor stock that happened to be up 21.41% today. It's a $5 stock. I've seen this stock coming up. Let me go to a different chart though. So I'll go into my daily, sorry. I told George I didn't get enough sleep last night. So anyway, these are the charts that I use primarily. They're under this folder called impulse reaction charts. Why do I call them that? It's because I'm looking for stocks that are moving up or expanding and then going into a contraction phase, and that's where we buy them or try to buy them, right above that. So let me just bring one of these up on this little stock, but I'm going to go to this view right here. Now, this actually I want to go down here. And the reason I want to go down here is because in the charts we have the ability to put what we call a warehouse view within a chart. So we can take any field in the warehouse, and I don't want to confuse you if you don't know what I'm talking about, but this is a warehouse behind me. Any field that's in here or in the list can also be put into a chart. And the advantage of that is I can get all of this intraday information right over here, and it shows me how much a stock moved, what the volume was compared to the average volume, and so on and so forth. You can put anything in here that you want. Now, I didn't bring up the correct stock here, so let me bring this one up right here. And this is a stock that has been giving great VPA flags from down here. Now look at this extreme volume on this stock. I didn't take this stock, unfortunately, but I have seen it coming up. And look at it. It's I don't know what the attraction is. It's got to be a news-related stock, but this is where the views that are in my warehouse views can help locate these stocks, because I have a view which looks for stocks with a VPA flag or signal today. And on that day, on the very bottom with this kind of movement, well, not the very bottom, but after this day, it was generating VPA flags. It was also generating them here, actually here and here too. And at this point, this is a test, low volume test, and this is a confirmation of that test, and the stock just continues to go. And what I say it was up today, 21.41%. Let me get back to my views. Let's just run through a few of these. I think I'll just stick with the semiconductors today, if that's fine with everybody. This view, and remember, this is going to scan for stocks as of last night, because I did not go through and do a full intraday update. So this is my primary view here. I'm sorry, I was talking, I wasn't looking. It's number one. These are stocks that are down from, most of them have been through an expansion phase, or they've been moving up, and then they're pausing. So let's just take a look at this. Now here is a very good example, Ambarella. I'm doing this on the fly. I have not previewed this. You're going to walk through this with me. So here is a stock that has gone, coming off the bottom. It's gone through an expansion phase, and then it started basing sideways. This is contraction. So the market obviously was moving up, as was the group. Ambarella must have been an earnings disappointment back here, but if you look at these VPA flags around here, you can see that Ambarella was starting to be accumulated. And on this day right here, this is called an effort to rise VPA. Why did it generate that? Because it had a high volume day and it closed near the intraday high. Consequently, it generated a effort to rise, and then it just kept going. I don't like to chase them in here unless I get them near the low. I would rather wait for this contraction period and then look to buy them. Now let's go to a different chart, which I use all the time. It's my number 3 view under impulse reaction charts, and whenever a green line appears, that means that the stock is down from a very short-term swing high. So as I move into this stock, I hit the alternate 1 key on my keyboard to zoom in, and right here is an excellent place, or right here. This down here, too many lows in a row, I probably would not have been interested there, but on the other hand, I need to qualify that because there are back-to-back low volume tests for supply. Now those of you who do not know what that means, it means that the volume is extremely light compared to recent volume. The close of the candle is near the upper part of the daily range. So with low volume and moving up towards the top of the range, those are low volume tests for supply, and they're very good indicators. I do have screens in here for a just if you would just want to screen for low volume tests. But when they appear, you should pay attention. Then there's that effort to rise, but these are the areas I'm primarily looking for, because a trend has begun. Let me clean some of this up. Start over. A trend, short-term trend has begun. Now it isn't really a trend until it has a higher low, which it did, and then a higher high. So where's your higher high? Well, a higher high than this right here is just right in here. So this stock, Ambarella, could have been purchased somewhere in this range, and then again today right in this range. So with a buy stop in place coming out of contraction, that is an excellent place to buy these stocks. You have your risk control in place. You know how much you're buying before you ever put the trade on. I'm going to just flash this up on the screen. This is my spreadsheet, and every trade that I take, I put the high, the low, and information in here. It calculates the stop for me. It tells me how many shares I can buy based upon the amount of capital that I put in here. This is my Bible, and the people that have taken the webinars are the ones that are doing very well. We live by this spreadsheet. I'll tell you why we do, primarily. It takes the emotion out of investing or trading. I shouldn't say investing, I should say out of trading. Because if you make a mistake, if you're wrong, and you're going to be wrong plenty of times. I'm wrong plenty of times because once a trade goes into effect, it's a random event. You really don't know if it's going to follow through or not. But you're putting the odds in your favor after a contraction, and if a trend is forming, because the momentum is suddenly from the downside, or the downside has ended. The momentum is now up. It's digesting the gains, and we're looking to get into the trade. A couple more things I want to point out that I haven't. These are Gil Morales's and Chris Casher's pocket pivots. These are in the program, and this is my volume, a point of control that Matthew put in. I call it mine because I came up with the idea of using the 10-10, and he implemented it for me because this is an excellent trigger. This gives me an idea of when the bulls are in control and the bears have lost control. So see how it's not always precise. It's a little jumpy at times. That's because it's following the price and volume. But coming off of here, when this was going down, when this turned green at this point, it reflects what happened up here. Even though it pulls back here, it wasn't enough to turn negative. Why? Because there were these low volume tests for supply. These are all the things you really learn to look at when you're using this program, and pretty soon they come natural to you. It may seem complicated at first, but it really isn't. Okay, let me move on from here. That's a list based upon the VPOC positive down from the swing high. It's my favorite way to trade to look for stocks. But if you're looking for a VPA flag today and the volume point of control 10 with a 3-day window on that volume point of control, you come down to this folder. And if I look up at this view, you can see this column right here, the days since the volume point of control, 10-10 crossover. 0 means it crossed over. It would have been yesterday at that point. And this one for Marvel Tech, it passed over 3 days prior to this. This would be the 4th day today, and Marvel had a good day today. Look at Marvel. I missed this. This was in my watch list this morning, but I didn't put my order in. And that's one of my biggest problems. I get so occupied doing other things that I sometimes forget to put the orders in. But this is a good example of a stock that has gone through some phases, and look at it here during the contraction phase. And during this contraction phase, help me count how many bullish VPA flags there were. 1, 2, 3, and well, 3 before today, and then there were 2 today. This yellow triangle is a confirmation of the low volume test for supply yesterday. Okay? Paul says some of them got Marvel at the open. Paul, I'm just going to give you the password to my account so you can trade for me. Okay? All right, and I'll be watching the equity line very closely. Paul Reiki. I know a lot of you know Paul Reiki. He has really taken to this, and Paul was not trading much over the years, and now he is probably one of the most active traders in. We have a Skype group for the webinar people. I think Paul's probably one of the most active traders in there. And Payush says he also got Marvel. See, nobody sent me a text. Anyway, I'm just kidding. But look at all these. Now here is a pullback from the swing high. It went down a little bit lower. I like to see it stop after a couple of down days. I guess you could consider it here. I wouldn't have taken that one. Here it did it again. This is the level right here where should have gotten in right there, but then it pulled back, but it wouldn't have taken, the stop would not have been executed, so the trade would have been intact. Here's another one right here. Well, that actually didn't happen until today, when these people that got in. Maryland got in too. Good, Maryland. Everybody got in but me, it sounds like. And look where this closed. It closed near the top of its daily range. What are the other factors that are in here that we look at? We look at volume point of control. His pocket pivot over here, another one today. Why? Because the volume was a lot higher than it's been over the prior days. Here's your low volume test for supply, a great signal that you should be looking for. And here is a confirmation of the test for supply. That's what the yellow triangle means. This triangle here, all of these are indicated right over here in the chart. High volume up bar closing on the high indicates strength. So like I said, they don't always work, but they work more often than not. And stick to the tight charts. I'm going to show you a stock that some of us are in, and I bought it yesterday, and I wish I wouldn't have, but I'm still in it. I moved my stop up today. It came within 1 penny of stopping me out. But this is what's considered a loose chart, and it will just drive you crazy. Yeah, the data's 15 minutes delayed, Bill, but it's free. You know, and if you want to pay for real-time quotes, yeah, you don't need to. You just paste your lists into Thinkorswim or TradeStation and go with it. Anyway, I do my prospecting before the market anyway, and thank you. Yeah, there have been huge improvements, and I haven't made the improvements. George and Matt and I talk about this stuff. Matt and George implement everything, and Matt is the one who did all of the yeoman work on putting this VPA in here, and that was a massive job that he didn't even tell me he was going to do until he was most of the way through it. But it makes a huge difference. Look at all these pocket pivot days, 3 in a row. The VPOC turns positive at the same day. Yeah, I mean, this is a trade. If you get in down here, and I believe Paul Reike got in down here, but you know, I bought it up here, and today it gapped open. I thought this thing is going to turn into a tight stock. What did it do? Opened at the high and came down. We'll see what it does tomorrow. But anyway, if you have your risk control in place, it's not that big a deal, because you know you can't get hurt too badly. It's when you put a trade on and you don't have any risk control, it starts moving against you, and you say, oh, I'll give it another day. How many of you have done that? I've done it too many times, and that just does not work. Anyway, I'm getting off the point here. Sorry. Okay, so this is the VPOC. No, I'm sorry. I got off my train of thought here. I'm going back to Marvel, because the VPOC happened 2 days ago. It was a 3-day window. Don't count today. It happened on this day right here, and there was a VPA flag here. This is another view that I like to look at it. Okay, now let's go back to this. If you just want to look at the VPA flags only, you go to folder number 3, bullish VPA signal today, which was yesterday. We're still in the semiconductor devices. This column right here, days since the last VPA signal, all zeros, and these are the VPA signal conditions which were met. And to get this to work, this is a result of a filter which took me a while to build, because any of these conditions, if they are met, then the stock will appear through here. So if the VPA signal equals yes, and, or if it meets any of these conditions, then it shows up through this filter. So I don't get just one condition, I get a bunch of conditions, and which is actually a better way rather than just trying to locate one, because I can get a view of everything that happened here. And look at all of these stocks yesterday that had a test for supply. Well, let me do the test for supply again. Quick Logic had a test for supply. It didn't do so well today, but what do we have here? We have 15 stocks, and 13 of them were up today. So it's a good screen in itself. So I've gone through those. This is strictly a VPOC scan. I'm not looking for anything other than the volume point of control crossing over. Let's just look at this. Here's one that occurred. Oh, this is a nice flag on this chart. Anybody get this one? This was a 3-day window. You can see the days since the VPOC crossover, and on that same day there were signals, VPA flags, and This shot way up here. This is stopping volume, and the VPOC fired here. I'm not screening for anything but the VPOC, and that happened 2 days ago, and it formed a really tight flag here, and there's your green bar, pull back from the high. So an entry point would have been there on this tight a chart. You may want to take it a little bit earlier, but that's a good looking chart. Also, I will point out, I haven't talked about this yet, but I'm going to, well, I'll just wait till I get to that. Okay, so let's move on down the list a little bit. Rocket stocks. I call these the Perfect Speculator Primary Screen. This is a little $3 or $4 book you can buy on Amazon. It looks for stocks that are either breaking out to all-time highs or actually 3.2 years is the minimum, and that number is let's see if I have, I don't have that in the view here, I don't think. Anyway, it's looking for stocks in the semiconductor group, because you can see I'm still in semiconductors, that are breaking out to long-term highs. And another thing I liked about OCLR yesterday, it was breaking out to a multi-year high. But the stock has just a very strange personality. Now on this one here is where this was generated. And you may be asking, if this is a high, why is this black candle over here? Because this is a close, or was a closing high on this right here. This is the close for that day. So it was hitting a closing high yesterday, and look at this, it's cleared that today. This stock looks good too. It looked better here on this effort to rise VPA, and here, if you look down at the bottom, you'll see where the VPOC turned positive. This was a shakeout, and notice on this shakeout here, heavy volume here, but as the shakeout continued, see how the volume dropped off? That means that the selling was really coming to an end, okay? And guess what happened? It reversed, went up, it's out to an all-time high now, or a multi-year high. Broadcom's another one. Good example of a tight chart. Where's a place to get in this one? Well, right here where the green bar is. The best place to buy it would have been right here, obviously, in retrospect, because here are your pull downs from a one-day high. We have a congestion area here. It broke past that around $181, and now it's up around $213. So this pullback method works. Doesn't always work, but it works. It works enough to make you a lot of money if you're disciplined. Right, Paul? Or right, Carrie, are you on? Okay, let's move on down the list. So, Perfect Speculator. You also have 52-week highs, 52-week high retrace, which is a slight pullback from a 52-week high. LLUR based on, this is lower left, upper right charts. Anybody get back into AMD today? Thanks, Carrie. AMD pulled back several days. It pulled back too many days in a row, but today, for this, I wouldn't have taken it because of too many days, consecutive days in a row, but I wasn't paying any attention to this stock today, but you can see that it gapped open and it took off again today, but got a little bit of resistance here, but if it clears this, who knows where this one's going to go. I'm going to put a quarterly chart on here. Alternate, whoops, no, that's wrong. Let's go to weekly. And you can see how far this stock has come from $1 to $14 since early in 2016. This stock has made an amazing run. And it continues to go. Okay, so I'm going to move on from that view. These are the views that are available. Now I need to get into. Okay, now I'm going to start talking about the fan formation. The fan formation, and this is stock several of us bought today. Several of us have already been in this stock. It's a small semiconductor stock that has had good earnings, and the earnings estimates that are coming in the future. The current quarter is estimated to be up 300% compared to the same quarter 1 year ago. This was up 400% compared to 12/15. Went from 2 cents to 10 cents. So we get all this fundamental information right in front of us. The earnings are out of the way. Here is what I was looking at today on the pullback. Here's your area. Here is your contraction area. I keep harping on this, but I made that a little bit too large. Contraction area. You're going from expansion to contraction, and you want to buy it coming out of contraction. Now, I didn't like the way it gave back a little bit at the from midday on, I think, but the trade's still intact. And you can see there's pocket pivots where the VPOC fire clear back here. So lots of good signals on this. And this is a tight chart. I love these tight charts. Yeah, Paul got Kim at the open today, so did I. I put a buy stop in. Actually, I put a stop limit in so I wouldn't pay too much for it if it gapped. And Carrie got it too. So a lot of people got it. Well, who was selling up? Were you guys selling and taking profits? Well, this view here finds the short-term pullbacks, and that's what you have to look for. No, I don't have a view that other than this, but this is the one we use all the time. And it works. Because if you see a one-day pullback and then you start watching this stock, and if it holds in here, that's your contraction. You don't want a long-term contraction. You want a short-term contraction. Because why? Because we're in a trend. This view that I'm looking at right now, or the screen I'm looking at, is fan formations with bullish VPA signals today. So here is why this came up yesterday. I'm going to point out the VPA signal that occurred yesterday. This is the fan. This is the 18-day exponential moving average. This is the 50. This is the 100. And this is the 200. When you see a stock like that, that indicates that a stock is in a long-term trend. Now, can the trend end? Absolutely. But for now, it's up, and trends have a tendency to persist. I'm going to close my browser there. Trends have a tendency to persist, and you can see that clearly in Kim. Here is where the trend, well, the trend went into effect, the fan, I'm sorry, went into effect back here, when this was a $3.50 stock. Now it's an $8 plus stock. You can see that these lines were all above one another, and then here is major expansion when the lines are moving apart and you have stocks closing near their daily highs, several of them here, and then it goes into contraction. Then it pulls back. Then it gets some momentum again. But notice when it pulled back, it penetrated the 18 seriously only this day, and there was buying support coming in here. That's what that circle indicates. And then it tested this here, and it tested it multiple times here. And what do we have here? We have a cluster of VPA flags saying this stock is under accumulation. And what happens? It takes off. I shouldn't have been buying it here. Should have been buying it coming off of this one. And I think that's where Marilyn and some other people bought it. I just wasn't paying attention. And nobody will give me a stock tip, I'll tell you that. Just kidding, of course. They all are. That Skype room is very active for the webinar people. I just don't pay attention to it sometimes because I'm putting all these screens together for you. Okay, so let's move back to this. That is a VPA signal, long-term bullish. Now, let's go in down here to the next folder. These were just added. I'm going to go down to one that I talked about yesterday. It's a bullish VPA flag today with a counter trend. Now, what is a counter trend? First of all, the flag that I just showed you with the stacked moving averages has to be in place. So let's just take a look at one of these. Notice that all of these were up today. So here is the flag, it's in place. So the counter trend, I thought, well, a counter trend move with the major moving averages in place indicating that a stock is in a long-term trend, a counter trend could be when the 3-day exponential moving average crosses down through the 6-day exponential moving average. So we have a short-term pullback, and let's just go to that, to a chart that shows that. So I'm going to go down here to this, and I'll zoom in on this. And if you look closely, you can see that, well, it's hard to see. So I will zoom way in. The 3 is the green line that's down through the 6, which is the blue line, and they're both below the 18, but the 18 is not factoring into this. Okay? But look at all these VPA flags. What are those VPA flags telling us on IDTI? They're telling us that there are buyers coming in to support this stock. And today, on a very strong market day, it had a good move. Still a ton of resistance here, but look what happened today. The 3 moved back up through the 6. We had a double VPA flag. We had strength seen returning and an effort to rise today. If it can break past this resistance area here, because the group is so strong, it has a chance to go. We also have a positive volume point of control today. You know, this is a loose, sloppy chart, which I don't like about it, but it met all the criteria of the screen. Let's look at this one. VIPs. I'm sorry, Vishay, not VIPs. Okay, the 3 was down below the 6, but look at this. Today it's turning positive, and we had an effort to rise. The VPOC is positive. The group's moving up. Let's zoom out on this. Another sloppy chart. Why does it pass this screen? If I go back up to this view, it should show that the fan, the long-term fan, is still in effect. It bounced off of the 100-day exponential moving average, and then it found support at the 50-day exponential moving average, along with a lot of VPA flags, indicating that there is interest in this stock. Okay, so that is my counter trend screen. Let's just flip through the rest of these. Now, I'm not going to go to the other view because I just want to show you that the fan is in effect again. Now look at this, same thing. Long-term trend, it passed the screen because the 3 is below the 6, or it was. It probably went above it again today. I'll just flip to that and we'll see. Yeah, it went above it right there today. So here's your counter trend. The purpose of this screen is to look for stocks that have had a strong move based upon the long-term screen, and they have pulled back and they're looking to potentially go again. I say potentially because you never know. But somebody who doesn't want to wait for a breakout, and most breakout, I'm not going to say most breakouts, but a lot of breakouts fail. And if you can pick up these stocks where they're pulling back, you know they're in a long-term trend because the moving averages are telling you that. Now, you know, this one's had some serious moves in both directions. It tightened up here, but then it came back and found support at the 50, and it's moving up. So anybody who bought in here has a successful trade right now. Let's look at Rudolph. Okay, same thing, long-term trend. VPA flag yesterday. This one's, I don't really like the looks of this. I hate these wicks up here like this, price rejection. But you can see the purpose of the screen. Now I'm just in semiconductor. That's too loose for me. Not even going to look at it. I'm just in semiconductors. If you apply this to all securities or any other groups, you're going to find, you know, a lot of candidates that meet that criteria. Okay, so I'm through with that. Let me check my list here. Okay, I was going to do all securities and then show you that view that I just showed you for the counter trend, but I don't think I'll do that. You get the idea. Okay, let's just take a look here at accumulation. Now these are stocks that are going from C up to A or to B, or all the way from C to B to A. And let me just bring up one of these now. Hymax I have not looked at for a while, and you can see why I haven't looked at it for a while. This is stock that I traded in the past, but I didn't know what happened to it. It fell off the map. If you use this view, and if you go down to the daily charts under the miscellaneous charts, you click on accumulation distribution right here. This chart shows you when a stock is changing its accumulation. It was D distribution down here at the bottom. It went to E, I'm sorry, it was E distribution, went to D, went to C for one day, went to B, and then it went to A in this short period of time. And these green bars here indicate that the signals are changing from distribution to accumulation. So when this turned to C accumulation, it was generating the green bars. If I put my crosshair on here, you can see that on the second day of, look at these great you know, signals here as it moved up. Yeah, there were a bunch of signals moving down, but you don't buy these. I mean, because this is in a long-term downtrend. It's got a series of lower highs and lower lows, and it just keeps falling. But here something happened. I don't know what happened, but here's the effort to rise. The pocket pivots actually started occurring back in here, several VPA flags, and it took off. I had no idea that this stock was on the move. Usually we don't look at these stocks, but what I'm showing you here is just another view when accumulation is changing. Let's do one more. This is not as good an example. Back here it was a good example. Too inexpensive, too cheap. Let's see what this one is. How about this one? Okay. This is what I mean about it going from C to at least B. Here is C up here on the yellow, here is B on the green, and it was shown when these green bars are being generated right here, that indicates that there is some early accumulation based upon the velocity. Once again, a lot of great VPA flags indicating early accumulation in here, found support going back over to this area, and the group was moving up, of course, because it's a semiconductor group. Just a great group during this market run. Okay, now I want to spend the rest of the time on, and I'm going to go to all securities here. To do that, I'll click on my space bar, and I'll re-engage the filter. And if you go down here to the intraday, what this does on a 15-minute delayed basis, it finds stocks that are moving up off of their lows in the daily range. Tom, the color of the price bars on that accumulation chart were for the trends, and they can be changed, and it's all in the help file. But what this does, and this is a powerful filter, this one looks for stocks that have pulled back from that very short-term high that I was talking about, preferably with a fan in place. And then I'm going to bring this chart up here. And these represent different trend phases, Tom. You can change that if you don't like it, but that's what it does. So here, trends are all down, and then the trend was changing, and then it becomes a strong trend, okay? But I don't want to use this chart. I want to use, let's see here. Well, this is good with the industry group. So what this filter does is it locates stocks that are moving up off of their lows from, actually let me go to this chart here, number 3, high-low trigger. It finds the stocks that have contracted for a day or two. And in this instance, it contracted for 3 days. And then during the day, it is determining that this stock has moved up from its open to a much higher level. Now, it's warning you about this extreme volume. That's what this VPA flag is right here. You're getting mixed signals, effort to rise, but it's warning you that this has excessive volume, so be careful. Anyway, that's another story. So here, looking at this, SREV, it closed at 100% of its daily range. The percentage change from the low to the high is 4.67%. Now the filter, I'm going to show you the filter quickly. A lot of people in the Skype group use these views to look for trades that may be showing up in the SMART groups or the top 50 group and inclusion report at the end of the day. So here is, I don't use the volume. You can see that I am not using that right now. That was too limiting. I left it in here. If I wanted to activate it, I would just make that greater than, but I don't think I will. It has to be above the VPOC. The day's high is high. It's less than or equal to 1. That is where you get the slight pullback. And then here is the key to this filter. The intraday percentage change, the last divided by the open, is greater than 0. So after 15 minutes, when the market has opened up, we're getting these delayed quotes, it starts showing these stocks that are moving up from their lows. And you can see that today in all securities, 465 stocks did that after a slight pullback from the previous day's high. Let's look at Huntsman here. See, it's green here. It gapped open. If you'd had a buy stop in, probably would have been right above that wick right there, or if you're more adventuresome, down here, but you still would have had to buy the gap. And this is a stock that would have shown up at the end of the day yesterday on the pullback screen, the first one I showed you, which is my favorite. Okay, So we're looking, this finds stocks that have the characteristics of a short-term contraction, which you can locate intraday. All right? Now, this one here takes that requirement off. It's just looking for stocks that are moving up off of their intraday low, and that shoots all the way up to 1070. Now, this is sorted on a raw combo. My raw combo is one that the intraday change, it's the same field as the filter field. The last divided by the open, I weight that most heavily at 40%. And then I want the intraday range weighted at 30, and the intraday percent volume divided by the 50-day moving average volume weighted at 30. And what that does is it drives the stocks that are moving the most off of their lows and are showing really good demand to the top of the list. Now, if I compare this stock, which I showed you, to one down on the bottom, you can see that this one moved up off its low, but it moved up barely. So the strength is at the top of the list, and that is all driven by a combo ranking. Now, John Goebel says the handout is working now if you really want it. Now, I'm going to close with this one. This is the IPOs off of the intraday low. Now, one thing about VPA, we need 120 days of data for the VPA flags to start calculating properly. That's just the way the math works. So I decided that, well, we need a way to get information about these IPOs that are out and are triggering, but we needed a trigger. So that's where the volume point of control 1010 comes into play. And if you look over here, you can see the days since the crossover. Some of these are in industry groups, some of them are not, because they are they're IPOs, and some haven't been assigned to groups yet. So what we're looking at here, we're looking at the same combo that I just showed you, but if I bring this filter up, this is another very strong feature of HGSI. We can go to a specific group or a group member, and if I click on the top-down list, or the top, that arrow I should say, it takes me directly to the IPOs folder, which is a smart group. So, well, I should have just canceled that. I'll just cancel this. So all of these stocks have come out within the last 6 months. And using this combo, we can look for stocks that are IPOs and they are moving intraday. Now, this one is a beauty. It moved intraday yesterday, pocket pivots yesterday, pocket pivot back here, but look where it started appearing through the filter. The requirement is that it pass through the VPOC 1010, and that's where it started passing through, right here on that bar. And then a few days later was a pocket pivot, didn't do much, but it was a real tight range here. If it's tight like that, that means people are not selling. They're hanging on to these stocks, okay? And then it took off. That's just one example. Here's another one. An IPO came out back here, fell sharply. That's why, you know, it's tough to buy IPOs as they come out because a lot of times you really get hammered. Wait for them. And then here it started showing up. Here was a pocket pivot. What happened? It based sideways, kind of a sloppy long-term flag. And what happened? Another pocket pivot yesterday, and it took off again. So if you like to find IPOs, use this intraday. It'll help you find IPOs. Look at the gains on some of these today. Now these stocks, let me go back and look at that filter. I believe the requirement is that they need to be up for the day, of course. No, the intraday change divided by the last open. Okay. Actually, I took that VPOC, I neutered that. I neutered that, come to think of it, because here it shows that this one's negative, but still I wanted it, because I don't know why I did that, because it was eliminating too many stocks. So let's look at this stock, Dell Technologies. It has a negative VPOC. It's still in the filter, but I took it off, and I wanted it in here because I'm looking for these stocks that are coming off of their lows. And here it was negative yesterday, but it turned positive today. Look at all these great buy points on this stock with the green bar. You know, it just takes some detective work. Marilyn says she bought IRTC this morning. Great. Good for you. Now there's another person who's become a very active trader, Marilyn, when she started following this method. Anyway, any questions before we get off? I've gone a little over an hour and I covered everything I wanted to cover. There are more views in there. These are the ones that I use the most, but they all have a function, or a purpose, I should say. Not a single question. It has to be up off its low, PK. That's what the filter does. I looked at that. Let's take one more look here. Make sure I didn't screw it up. Okay, this, the last divided by the open has to be greater than 0. The 3 has to be above the 6, and no, it does not have to be up for the day, but it has to be off its low. Okay? Well, thanks, Bill. If you aren't using HGSI, you better come back. Steve, thank you. You always say another great webinar. I must be getting good at this. Thanks, Tom. Of course, I've had a lot of experience, haven't I? Yeah, there's a lot of great stuff for PK. I mean, this program is the greatest for prospecting if you know what you're looking for. Because we can tie it into top down. It's, you know, top down. You get a perspective on the market, and then you know where to go. But there are other opportunities where, you know, group rotation is coming in. Anyway, thanks a lot, everybody. Yeah, well, I don't know. I'll probably disappoint sometime, Steve. Okay. Anyway, good seeing you, Bill. Okay, George, I think we'll wrap it up.